This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with John Stidd, president of DealMaker Reach. DealMaker is on a mission to create the most sophisticated capital markets tools on the planet, powering capital to flow faster. It offers a suite of primary issuance, shareholder management, and capital raising solutions to support all capital raises, types, and all securities. John, thank you for joining us.
Oh, Hall, thank you for having me.
So where are you calling from today?
I'm in Austin, Texas, which is, it's great. Been here about 2 years now. So I've seen some of your brands from Skew, which is so cool. You know, it's like that and the jerky brand as well. I've seen them all around. So as an Austinite now, it was cool to see that on the Skew website there.
Well, great. Well, tell us more about your background.
Yeah, so I am currently the president of DealMaker Reach. How I ended up there was a little bit of a meandering, but I was in management consulting. I thought that was a great way to help businesses grow. And then after a while of doing that, you're in there with a big bank who doesn't seem to care about the nitty gritty of growth. So, you know, effectively, I was not effective. I was not helping companies grow. I spent some time starting a faucet product, actually, that was like something that you could retrofit your sink with to make it motion sensing. So you could have, you know, you could save water in 10 minutes versus, you know, having to install a motion sensing sink and all that. There's a number of reasons why that didn't work, but somebody who was interested in investing actually said, you know, hey, you'd be great for this role. And it was out at a digital agency doing strategy for them. And I said, oh, you know, here's how you can help companies grow. And this was in 2016, right? So, you know, leveraging digital tactics to really, you know, provide the strategy and growth roadmap for these companies to grow online digitally. So, you know, was doing that for a while. And then a couple of us said, hey, we can go do this ourselves and be more hands-on with all of these companies. As a testament to that, you know, the first client who signed with us is actually still a client all these years and transitions later through, you know, different name changes that we've had. So we started a digital agency and then actually found ourselves through a favor to a friend in equity crowdfunding because somebody said, you know, hey, can you help us raise capital online? And at the time we were working out of the back of an Ethiopian jazz cafe, which was quite interesting, really great espresso. And we said, you know, sure, here's how we would do that, right? Because we were familiar with how do you do performance marketing for e-commerce brands, right, through their Shopify store. So acquired investors is online is kind of like a high price good. So instead of a $60 hoodie, it's a $600 investment opportunity, but the same digital tactics apply to that. So that's the brief background of how we all got here.
Well, great. Well, you mentioned equity crowdfunding. Tell us more about raising funding for a business using equity crowdfunding.
Yeah. So I would say that, you know, starting with like the why companies should use that, right? Or even backing up further, right? Like fundamentally talking about equity crowdfunding, it does allow companies to raise capital online. There's a couple different vehicles for that. The most popular are what's called a Reg CF and a Reg A. The main distinction there is just the amount of capital that you can raise, which the underpinnings of that are then how do you file to raise that capital? A Reg CF is a smaller amount of capital. You can raise up to 5 million, right? And then a Reg A plus is up to 75 million. So, you know, for companies interested in this somewhat of a modern company movement, I call it, right? Because it allows people to take down the traditional distribution networks of how capital is raised, right? And go direct to their audience or use it to build an audience, right? You can do this through digital, right? Which, you know, so as this all got started, it was actually part of the Small Jobs Act, right? Where some of the accreditation rules changed, where you could now mass solicit an offering, which for anybody in digital was sort of a euphemism for digital marketing, right? So now companies can raise capital online, and we think of it like, you know, DealMaker as Shopify, right? So, you know, a lot more people will be familiar with Shopify and e-commerce, right? DealMaker is the backend technology that is like Shopify that allows you to raise capital with a couple clicks of a button.
Well, great. And why should companies use equity crowdfunding versus some other means?
Yeah, oftentimes what we've seen is it's great for a brand, right? So if a brand has an existing audience, and any brand at any point should be thinking about lifetime value, right? And how do you take a customer and make them a brand advocate? What we've seen more recently is big companies willing to make that leap and raise capital through their community that they already have access to, right? In fairly short order, you could raise $5 million from your community by tapping into this audience that you already have access to, right? That when you make a customer a shareholder, they're like the supercharged advocate for the company once you do that, right? So, that's one reason why. Other reasons would be that it's traditionally a little bit more flexible for founders, right? As opposed to raising venture capital, right? You can keep more ownership, right? Preferred versus common shares. So, there's ways to do it that are more founder friendly as well.
Well, great. Well, there's more than just one type of crowdfunding out there. Can you touch on the different types of equity crowdfunding?
Yeah, certainly. So that goes back to the Reg A versus the Reg CF, right? And just the allotments of capital that you can raise. DealMaker Security is the group that works with companies to do all the filings for that. But, for raising capital through the Reg A, right, which is up to 75 million, it does require SEC review and approval, right? There are different requirements for a Reg CF at that lower amount of capital, which is up to $5 million. But for anybody getting into the space initially, right, we suggest the Reg CF. It's a little faster to launch. It's less capital, so you can typically raise it more quickly, right? And what we've seen recently is, companies doing this as a bridge round. We have a client of ours who back in November raised $5 million very quickly in about a month, right, from their audience. They had done some Reg A's before, so they already had this audience of community and investors who could then, reinvest, right? But if you look at thinking back to November and what sort of a wacky time period it was with the markets going sideways around a lot of uncertainty, for a company to be able to say, hey, we're raising $5 million and do it in 30 days, right? Goes back to why explore equity crowdfunding is, if you have the audience to do it, you can raise capital very quickly on your own terms.
Great. Well, you mentioned a digital capital raise. Are there any digital trends that are playing into this?
Yeah, certainly. I think the way that we think about distribution now, right, is very different. And distribution just meaning access to eyeballs and who owns the eyeballs, right? If you look at somebody like Ryan Reynolds, right, and what he's done with Wrexham or Mint Mobile, right? He steps in and he has access to these eyeballs and he can come acquire customers and build brand equity for a company just by being the face, right? Or if you look at somebody like Reese Witherspoon and her book club, right? She's got this book club. She'll launch books into there, right? And if they do well, she'll buy the rights to the book and then work with the studios to build out, that's how Big Little Lies became a hit on HBO, right? So trends in digital, right, are around distribution where, these people who own this audience now, whether that's through a following or an email list or their company where they have a big customer base or community following, can now raise capital. So trends that play into this are changing distribution and, people being able to go more direct to their audience, whether that means launching a movie through their audience, right? Or raising $50 million through their audience. I think distribution is a big part of that.
Great. So what does it mean to tap into your community? I hear that a lot around equity crowdfunding.
Certainly. And that's the community aspect is typically where it starts, for a company. It can be easier if you have a following, right? That could be an email list. It could be your Instagram following, right? To reach out to and say, hey, we're doing this capital raising round, right? And that can be a real moat for somebody, right? Where you have this community and turn that into an asset class because you can tap into them to raise capital, right? I mentioned the client of ours who back in the fall raised 5 million, right? Very quickly. We actually had another client around the same time period raise $12 million in 30 days, right? And they were able to do that because they had done some raises prior, right? So they built up this community, which is followers who are thinking about investing or just wanted to watch the company, right? And investors. And then they say, hey, we've executed on that roadmap. we're raising, 12 million. Here's what we're going to do with that. So to be able to tap into that community is a real competitive advantage. So by tapping in, it just means leveraging them to market your raise, right? And when you own that audience directly, it allows you to raise capital very quickly from them.
Well, great. And so what type of communities have you seen achieve the better success?
Yeah, I think there's probably a lot of parallels to this, to the work that, you do an angel invest in, right? Where, you're thinking about a company solving a real problem, right? And is that market opportunity large enough where if they solve that problem effectively, what is the upside of this company? And, who are the people executing it, right? So at a very high level, I think those tenets of investing are the same on digital. I will say though, with digital, right, we run TikTok ads, right, and Facebook ads. So you're battling people's attention spans. So a potential difference there as we think about digital offerings is being able to quickly grasp a problem and solution and talk to somebody about that, right? So, a med tech company with a heart valve, right, may be harder than, a med tech company that does something with a robot, right? So I just think being able to quickly articulate problem solution, market size, and the team of executors behind that, and what traction you have, and do that succinctly and quickly is certainly a challenge on digital, but the companies that we see perform best can do that very succinctly, right? It's a relatable problem solution that people understand. They can see how that would be a big market, and it's something that they're excited to get behind, whether that means, following the company or actually participating in the current investment round.
Well, great. Well, you see a lot of new technologies and emerging business models out there. If you could start a business tomorrow with one of those, what would that business be?
Yeah. So I think, this is where the imagination runs a little wild, because I have the fortunate experience to, be on the front lines with a lot of different companies and founders and see what they're building out. I do think the opportunity around clean energy, particularly the grid, right, whether that's battery storage or the raw materials behind that, I think are really compelling opportunities that, as the transition to energy and clean energy shift happens, right, it's going to be a tide that lifts a lot of boats, right, whether that's for storage or raw material suppliers, right, or other services providers in that stack, right? If I was thinking more industry specific, I actually am a huge fan of what you're doing in the community that you're building and the education around that, right? I personally would, with my knowledge of the space of equity crowdfunding, go even more niche and say, hey, there are private offerings that not a lot of people know about. And that's crazy because you can't nowadays get into a Stripe early enough, right? Like if Stripe had gone public, a lot of their market value has already been realized during their private growth stage, right? Whereas if you compare that to Microsoft back when they went public, right, and their initial market cap, right, I think there's a real need for retail investors to be able to tap into the private markets in this way to get exposure to this asset class that is growing more in the private stage rather than the public stage, right? So having a really tight thesis around that of like, hey, these are private offerings. Here's why they're great, right? It gives you exposure to this asset class before they go public. And here's the sector that we want to focus on. So actually I would likely do that in like a clean energy space and have a really crisp, clear focus around that and work on building audience there and, syndicating deals through that.
Well, great. Well, as you help startups raise funding in your business, what is one thing that happened that you didn't expect?
Oh, yeah, I would say sort of some of the interesting conversations that I get to have with these folks and seeing founders and some of the day-to-day, right? I didn't expect to be on that kind of front lines and build these relationships with some really interesting, thoughtful, smart people and how they go about building their businesses. So it gave me a much more clear view into, what they do on a day-to-day than I thought it would, as we're just helping them raise capital, which initially on the surface seemed like, you're on the sidelines, but you're very entrenched in what they're doing, right? Because it's when they have a traction update or they sign a new partner, right? You're familiar with the nuance of how that deal came to be. So yeah, I would say getting to work alongside some of these founders and hearing about their businesses and their strategies is a really exciting part of it that I wouldn't have necessarily expected.
That's great. Well, in the last minutes that we have here today, what else should we cover that we haven't?
Oh, I think just going back to the distribution note that I talked about before, when we talk about changes in a market and inflection points, right? I do think we'll continue to see this be a change in the marketplace. And, I mentioned Reese Witherspoon and Ryan Reynolds before, but you even look at somebody like Kim Kardashian in private equity, right? It's like she is this person with this audience that, can work with a private equity firm and sort of bestow the power of her audience on that group. Or, somebody like Serena Williams going to work in VC after. I just think that distribution changes will continue to be a benefit to the audience of companies going more direct. And I hope that has a cascading effect to the followers and communities of these companies that then get a chance to, take part in this upside of this company that, they're already helping with the growth of by being, a brand advocate. I think it's a really cool opportunity for them to potentially also invest in those companies and be along for that ride. So yeah, I covered that a little bit before, but it's something that I'm excited about for the future of this.
Well, great. So how best for listeners to get back in touch with you?
Oh, you can find me a lot of places. There are not a lot of Jonathan Stidds out there. You can find me on LinkedIn. Shoot me a note there. I'm active more so on LinkedIn than anywhere else. So that would be great.
Well, great. We'll put those contact details in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Oh, Hall, thanks so much for having me on. Appreciate what you do in the space for education as well as the companies themselves and with the accelerator there. So it was a great opportunity to talk to you, and I appreciate you having me on.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.